Hello and welcome to the Wendell Effect. This is Brandon Wendell. Apologize, camera's having a little bit of issues today, so we're just going to go ahead and go through our charts and information. You'll be able to see the charts and also hear my voice, but you can't see me today, but that's okay. Anyway, just a reminder, we're not registered broker-dealers or investment advisors. Can take a look at the information from an educational standpoint, not telling you to buy or hold anything in particular, giving any personalized recommendations. There's always risk of loss in the markets. We'll try to minimize the risk, but we can never eliminate it. And past performance is no indication of future results. And we're also not subject to trading restrictions, so we can have a position and initiate one at any time. Go ahead and stay in touch with me. Please email me at brandonwendell.cmt@gmail.com. That way I can get some feedback from you, get an idea of what you like, what you don't like, what you would like me to follow on the videos. Maybe if you've got any questions about some guests coming up or ones I've had in the past, you can also bring those up as well. You can hit me up on Twitter at TraderBdub. And don't forget to hit like and subscribe on this video so I can continue to bring you more of these and you get alerted, let us know when, or let you know when the new ones are coming out as well. So for this week, we're going to do our normal routine, kind of starting off looking at the equity index futures for the week, then bring it into the energy markets. We'll go jump into sector analysis and find out what might be happening in the stock sectors and where the opportunities might be. I'll even bring you a few individual opportunities as well. Kicking it off for the equity market index futures, we had kind of a wild week with the Fed last week, and now it's going to quiet down a little bit more. Looking at the S&P for the next couple of weeks, actually, February 5th through the 16th, historically we've been somewhat bullish. Over the last 25 years, 80% of the time we've gone up. It's been less than 1% average gain, but it is still a bullish week nonetheless. Taking a look at the actual chart here on the weekly, you can see we've broken out last week of our long-term downtrend from 2022 and beyond, and we have made higher lows and higher highs, so we're in an uptrend. What we didn't do is actually get into bullish territory on the RSI, so there's a little bit of underlying weakness here that we'll have to try to work our way through if we're going to continue to go higher. There is weekly supply overhead. I believe that's right around 4,300, so we still have some room to get there as well. Looking at the daily chart, you can see there's actually daily supply just by that weekly one at 4306 to 4343, kind of working our way up there. We just started pausing on Friday of last week at our Fibonacci extension of 61.8% of the previous impulse. Wouldn't be surprised to see a small pullback before we go higher and then maybe tap out right around that 4300 area for the end of the week. Looking at the 4-hour chart, that gives us an opportunity on a pullback to possibly go long between the 40.48, 40.88 areas. If we get that pullback to demand, it's a smart buy, again, targeting that 4,300 daily supply. Looking at all four markets, and that's not just last week, that was longer term. Bear with me for a moment. There we go. Get rid of that. Anyway, going all the way back until the October lows, we had kind of the Dow holding strength, and the Dow kind of gave up. You see, it just kind of went sideways for a while. Meanwhile, the Nasdaq, which had come off its lows, started leading us to the upside along with the Russell. Well, looking at this most recent rally that came out of the December 28th, you see that those two, the Nasdaq and the Russell, are clearly the leaders, while the Dow is just lackluster in its performance. So if we want to see where we're going to be going and if we're going to top out somewhere, the Nasdaq is probably the market to let us know because it is the leader to the upside. So looking at the Nasdaq over the last 25 years, February 5th through the 16th, 80% of the time we've had gains, and it's a little bit better than the S&P, but still slightly under 1%. So we should expect possible bullishness this week and going in next even. So looking at the Nasdaq, the chart, you can see we're cutting through this weekly supply. We've tested it before, deeper into it. Still haven't quite gotten above 60, but we are very bullish with higher low, higher high already being committed to. And it looks like we may not pause until this 13,500 area, which is the next weekly supply. On the daily, pretty much the same thing. I mean, we had the weekly supply about 13,457. The daily doesn't show anything until about 13,682. So right in the same area is what we're looking at. There's also another Fibonacci projection. We're pulling back from one. We ate through this supply. So interesting enough, that supply may be coming a little bit of a support zone if we pull back. So if we just do a little pullback, I would expect us to stay probably close to 60 or 70 on the RSI on this pullback and then bounce at that prior demand, which now becomes support, prior supply, which becomes support, and then move up towards the 13,682 this week. Looking at the 4-hour chart, you see we are on a pullback right now. We've pulled back almost 50%. You can see we tagged it once, bounced a little, but it looks like we're still on a small retracement. But I'd be looking for a pullback opportunity to buy, maybe at 12,400 or 12,450 is where that next Fibonacci retracement level is. But overall, we're still seeing bullishness. We got higher lows and higher highs. We've been pausing at each one of these fib extensions, and you see there's overlap with this one. So our next target would actually be around 13,009, but again, we got the 13,500 area of supply that we're going to deal with on the larger time frames. So overall, pretty bullish, and the Dow shows the same thing. Over the last 25 years, between the 5th of February to 16th of February, we've had 72% moves to the upside. Not as strong as the Nasdaq, but yet still somewhat powerful. Looking at the weekly chart, you can see we're just going sideways, almost like a little bull flag. We had to rally, flag, and get ready to rally again. We'll have to watch for the overhead supply up here at about 35,000. We'll call it 36,000 really on the weekly chart. So expect a possible break to the upside here when momentum picks up. Very quiet sideways pullback. We've pulled back 38% of the previous impulse, and again, just looking kind of quiet here. So we have to wait to see if it gets dragged up with the Nasdaq or not. And finally, on the 4-hour time frame, you see we're stuck in a little bit of a range. We kind of pinged off the top of the range. If we fail to touch the bottom around that 33,225, that would be your signal that we're getting ready to rally. So if we put in a low right around 33.5 or 33,750 and start to move up, then legitimately we're probably going to break out to the upside at that point. So keep an eye out for that. But again, it's really the Nasdaq that's going to take us higher, not the Dow. That's not the market to be buying. You want to trade the leader. This is one of the other leaders, the Russell, and you can see that we're pushing into a supply zone that's been used already. And not only has it been used, but we've got enough momentum now. We're getting above 60 that we should be able to cruise right through that. This is the weekly chart, and you also see higher lows, higher highs. So we're in an uptrend. The next real supply doesn't come until 2341 up here. On the daily chart, you can see we're slowing down just a little bit as we're running into a little overhead supply, but too much momentum to really cause it to turn down. So it looks like we should be able to push through this area. On the 4-hour chart, if we do get a bit of a pullback, this would be a good buying opportunity, 1925.2 to 1944.3. Get a pullback to that demand and watch it bounce off and rally very strong up towards that 2100 target. So that's what I'm looking for this week on the equity markets. Overall, somewhat bullish potentially. We're going to change our attention now to the energy markets. And we're going to start off with the crude oil, and looking at the patterns overall, it is a little bit bullish. As you can see, 64% over the last 25 years. For the next couple of weeks, we're a little bit bullish, but not hugely bullish. So just keep an eye out for that. We should get a little bit of bullish movement. Last week, we obviously had a big sell-off in crude, and that even though it was historically, we normally go to the upside, we could easily drop down towards our first demand zone of 67.23 this week. It's kind of what we, continuing what we did already here, just stuck in the sideways range. On the daily chart, there's really no reason why we can't go down. I mean, we kind of pulled back a little bit after a strong impulse down, and it looks as though we're continuing to move towards that 70.71, and then ultimately the demand zone down here from the weekly chart at 67.25. So we pulled back a little bit of a test here of supply, but it does look like crude oil actually wants to buck the seasonal trend and move down, not up. Same thing on the 4-hour. We already retested here. I would look for new zones to be formed, and I don't think this 72 is going to hold very well. I think ultimately we'll break down to the 67 level to break below that 70. Be careful. There might be a little fake out. If we punch through 70, look for a pullback before we go lower. Turning our attention to Natgas, this is actually pretty bearish, and this time of year, historically, the last 25 years, we actually dropped almost 2% for the next couple weeks here. For basically the month of February is very bearish. Well, looking at the chart, no big surprise, we're pretty much continuing our overall downtrend. We exceeded first target. We should have no problem getting down to 2.3 this week. That's well within our reach, our next target. Looking at the daily chart again, same thing, 2.3. It's a little bit under that. Looking at these impulses, we're likely to keep sliding. We are slowing down in momentum, but we're still very bearish. And the 4-hour chart, I'm looking to sell any kind of rally if it even happens. So we may not be able to get to the 2.7 before we start to slide more, but if we can, I'm looking to sell that supply. Looking over at gasoline, it looks as though there's a little bit of a bullish bias. 2.75% is average return until the end of the month. So definitely a big bullish run getting ready to happen here, potentially, on gasoline. Well, we've had a bit of a pullback on our weekly chart, 61.8% of the preceding impulse up, and we'll see if there's going to be more to this or if we're done. Like I said, seasonally, we normally move higher here. Looking at the daily chart, we've come into a demand zone at 2.33 to 2.25, kind of a wide zone, but you see strong bullish pressure coming out of that, and we're just barely below 40. So prices got a lot of momentum to the downside, but this is where we should turn around. If you're going to go long here, I would definitely wait for more confirmation. Catch it as it leaves the zone rather than trying to jump on board right away, or look at a smaller time frame like a 60-minute or a 4-hour to see the area where it's actually turning around, try and time your entry better. But we should hopefully turn around in this area, and our first target will be the 2.59 and then possibly beyond. Looking at the 4-hour chart, we've actually gone pretty deep into the 4-hour demand. Again, the daily is down at 2.25. Here, it's only at 2.30, but we've gone pretty deep and saw a little reaction to the upside here, but we should see our bullish pressure kick in. If it's going to, most likely we'll get a small move up, a pullback for divergence, and then a rally. So that's what I'm saying. Be patient. Don't jump in just because it turns a little bit. Make sure it's actually reversing the trend because it is pretty strong to the downside still. On heating oil, for the last 3 years, I couldn't go back any further on the specific contract. The last 3 years have always been bullish with a pretty good return of almost 5%. So this is going to be a very bullish month potentially, but you look at the chart, it shows the exact opposite. So we still have that bearish pressure trying to push us down on the weekly chart to 2.56 to 2.48 inside that demand zone. And we're just collapsing into it. So, going down to the daily chart, if we're going to get a bounce, it's got to happen pretty quick. Problem is we have too much bearish momentum for a nice meaningful bounce. I didn't mark it off, but this is actually a supply zone itself. You got drop, base, drop. So if we get a bounce, it's unlikely to get past that 3.1 before we go lower. That would be a great setup for a short, I believe. And on the 4-hour chart, I actually have it marked there, the 3.1178, 3.1578 rally base drop area supply. Might be forming one here to keep an eye out for at 2.9 as well. It's where the last little selling pressure came in. You see we're getting a little bit of a bounce as we hit that daily and also 4-hour demand, but because there's so much bearish pressure, it's going to be kind of like a dead cat bounce where it barely goes up and then drops. So let's take our attention now to the stock market and take a look at the overall sector performance and what might be happening going forward for this week. We will start off looking at the last 6 months. We still see that the leader was energy with inflation pressures, and we're also getting led by financials coming off the lows as well. So they are doing well even though we're in a raising interest rate environment because they were so beat up. They're kind of coming off those lows, and we also got materials and industrials. Last week, reads like a very bullish week. We had communication services, technology, and consumer discretionaries. Those do well when the market is bottoming out and getting ready to do a great rally. So looks like we are going to continue that kind of bullish move this week. Typically when you get rotation, you should see technology and industrial start to lead with a little bit more materials if that's going to be sustainable. If the rally is not sustainable, you'll see a little bit moving more into consumer staples, healthcare, and utilities as a defensive play. So keep an eye on that for this week. Going into the individual sector ETFs, we'll start off with the XLY, consumer discretionary, kind of pinged off this daily supply we've been watching. I had this posted before. Little pullback, not much, only 23.6. A lot of selling pressure on that candle, so we may go a little bit further to 38.2, but because we had so much bullish momentum, we'll eventually break out to the upside, possibly test this 170, which is the next real area of supply. So continued pullback this week down to 145.89 before we bounce. The communication sector, pretty much the same thing. We gapped up into the supply zone, bounced off it very well. Lots of bullish pressure. This is a small pullback, and I didn't put Fibonacci's on there, but if you started from here and projected downwards, probably only 23.6% retracement. We may retrace just a little bit more, and we'll see. And then we get more of a bounce. Let's see, that was the communications. This is technology. Same picture, though. Again, we had that gap up into supply, plenty of momentum. Expect a small pullback before we continue to go higher. The materials sector actually bounced off of two different projections. One was from the previous little move that we had, and then one was from the much bigger impulse. Both of those correlated and gave us a little bit of weakness. Notice prices made a much higher high, but the momentum indicator did not. That tells me that this materials sector might pull back a little bit more than the other ones, like technology and industrial. Or sorry, this is in materials. So the technology and communications might fare better than this sector. Energy sector is diving. We overshot supply and are now on the cusp of going into bearish territory on the momentum. So watch out for that. If we do, we'll make another run for this demand and probably break through it, going down towards 72, which would be the next area of demand. If we can stay above 40 as we come into this demand, doesn't look too likely, but if we do, we'll get a little bounce at that point and maybe get high, not higher by the end of the week, but at least push up a little more towards 86. Looking at the staples, this is looking pretty bearish. You can see we had an impulse down, corrected up, and are looking to continue our movement down. So we bounced off that supply for our impulse, and just looking a little weak here. I expect continued movement. It's not going to hit 69 right away, but eventually we've got kind of this drop retracement continuation. On the healthcare sector, also very, very bearish. You can see we're correcting, but it's a running correction. We had a very severe move down, a running correction where we're actually moving downwards, and that could lead to another move to take us down to 125.50. Plenty of bearish pressure picking up. That looks very, very weak, and prices should continue to slide. I don't really see anything on this time frame to be able to short, but if you got something on a smaller time frame, any supplies, you might be able to find something there. Utilities are also getting ready to retest the weekly demand it bounced from. So we hit that, had a big bounce up to supply, and if we do get any kind of a bounce here, I think this would be a great short at 71.71 down to the $60 demand from the weekly once again. I don't know if we're going to get enough power to push up that high, though. It looks as though we got a small little bounce happening here before we continue to go down. On the financials, they're actually climbing still, and our next target is 37.50 area. You can see we got 37.47, 37.52 is that area that's kind of two levels. You had this impulse, correction, impulse, and then also this impulse, correction, impulse. So we got overlapping of those two lines. That's our next target before we get any kind of meaningful pullback. The only problem is that we made this new high with less momentum, a little bit of divergence here, so we may get a correction before we can go higher. But overall, very bullish. That correction could lead to intraday buying opportunities if you look on the 60-minute or even 4-hour time frame to see if there's any kind of demand on this last impulse up. Looking at real estate, that actually is looking pretty strong. We stalled out at our first target, rallied up to the second target, pulling back. This candle, even though it's red, has lots of bottom tail. That's bullish. So we may be able to push higher towards the 44.39. But before we do, well, I guess I kind of already tagged this little rally, base, rally. And since we already tagged it, we might be late. But if there's other intraday opportunities, I would look for longs. That's going to carry us up towards that 44 level. It won't happen right away. So as far as trade ideas go, we had a few leftover ideas I'm going to go over first. On Borg Warner, we have to skip that one. Unfortunately, unless you got in, you can see it came down to the wicks, not the actual bodies that I normally use. And the trade worked out, but we missed it because it didn't actually touch. No big deal. There'll be others. Here, we actually moved up on APP. However, we couldn't take the long. And the reason why the trade, or sorry, not long, short, the short was disqualified because as we came into the zone, we had too much bullish momentum. So even though we are starting to move in the right direction, it's likely to continue to pull back and go through that supply zone. So do not enter APP on the short. If you did, make sure your stop is tight because you may need to get out of this if it pushes back up. On Yum, looking at the daily chart, we came into this demand zone once, twice, 3 times, 4 times now, and we are not getting any momentum. You notice we're having troubles getting above 60. We also can't break the demand because we're not getting below 40. So unfortunately, I'm going to have to try to exit this one at break even. It doesn't look like we're getting much out of it. And typically the longer you stay sideways, the more likely you are to continue the move. In this case, our move was up prior to the basing, so we should continue to move up. But if there's any more signs of weakness, we may end up breaking down. So I want to keep an eye on that. And if you get out for a little profit or even at break even at this point, you'd probably be better off than holding on too long. On Netflix, unfortunately, we had a pullback, but when earnings came out, it skyrocketed and took us to our target without the entry. So we were definitely right. It was bullish, but we just couldn't get in. Qualcomm on the daily chart went the other way. You can see it came in looking like it was going to be a decent short. RSI was in the right position, just below 60, but we picked up a lot of momentum and pulled through, so that one got stopped out. Consolidated Foods, or CF Industries, is sideways in motion. It looks like it may just break down from the sideways motion rather than moving up into our entry zone. I'm just going to go ahead and toss this one out and say I'm probably not going to waste my time following it anymore because it's unlikely to get into our entry. Now, if it does, I'll have alerts set and I can come back to it later, but it doesn't look so great so far. Dollar General also, this one was one that we were looking at a short opportunity at these two levels and unfortunately broke through the lower level, so that would have been a loss if you got short, and it just missed the upper level, but it seems to be working out pretty well. If you did get in at the upper level, you almost had to use the wick in order to do that. Kudos, but for me, I was just missed out on that opportunity and took the loss on the smaller, lower zone. But if you're in, it's moving in your favor. That's okay. Almost halfway to the first target, so you could probably move your stop to break even if you did get up at the upper zone and just let it run. ELV, Elvance Healthcare. This was another one that was a long entry, but I think because we were right at 60, there was no entry on this. It did overshoot a little bit, so depending on where you place your stop, you've already moved halfway to your target, so you can move your stop down to break even if you are still in. If this was too much of a wiggle for you, you probably got stopped out. It just depends on where you place your stops. But the trade's working halfway to the target. I usually move my stops to break even, and then I would apply some moving averages for a trailing stop. On Zillow, unfortunately, we never pulled back to our entry and eventually hit target, so we got to throw that one out. It was a good idea, but just never gave us the trade. TPX also never gave us the trade, couldn't pull back to the entries, ended up slamming upwards into our targets without us. Next, we have a new one, Cincinnati Financial Corporation, CINF, on a seasonal move from mid-February to the end of February, actually 6th through the 17th, 93% of the time over the last 15 years, this has rallied with an average return of almost 3%. So high probability rally opportunity if we get a pullback to demand. So looking at the daily chart, we have right here rally base and strong rally with a breakout. So if we can pull back to the 105.79, we can even raise it if you wanted to the wick right here. So looking at about 105.90 maybe. I'd have to take a look at it. But anyway, wherever that is, looking if we do get a pullback, it's going to be a good buying opportunity with the stop loss below. Target 1 at 124, target 2 at 132. It's just below some supply zones up there for going back. Also, Synopsys, 93% of the time over the last 15 years, had almost a 2% rate of return. So another strong candidate here. Looking at Synopsys, you can see we're almost to our demand zone. We have a drop base rally right there, 350.94, 356.16. Targets are projections overhead. And then we have another zone below. I think that was on the 4-hour time frame. It's not showing here on the daily for some reason. But actually, you could use rally, base, rally out of that. So either way, I'm looking more at the upper zone or the 4-hour lower zone if this has too much momentum to the downside. So that's what I got for this week. I want to thank you for being here for the Wendell Effect. Again, if you got any questions, you can email me, brandonwendell.cmt@gmail.com. Hit me up on Twitter, @TraderBdub. Make sure here on YouTube or wherever you're watching the video, you make sure you hit that like and subscribe and get the alerts as well. We appreciate that. Until next time, trade safe, trade well, and take care, everyone.